This conference will now be recorded.
Good morning, Patrick. This is Frank, Clueless 8 Trading. This is an advanced coaching session, private session, one-to-one. This is session number 2. It is March 29th, 2020, approximately 10:17 a.m. East Coast time out here. Let's begin. So, full disclosure, this is purely for financial education, not for any solicitation or advice. And we're going to go over and cover some very important topics. So, in continuation of the previous session that we did, which was very constructive, what I'd like to do today, well, first I'd like to ask you specifically if any particular topic that you want to cover and any questions you have. So go ahead.
You know what I'm doing? I'm designing and writing my own little book about what we're doing here, little journal, and designing everything down there. That helps a lot. I'm learning like in school, like candlestick patterns and formations and everything. So I'm really on that, like really on a regular basis. I don't know. I mean, like I always have some questions. I don't know even they go onto your nerves, but what I
No,
would
not at all.
not at all. Okay, good.
Yeah.
I would suggest if you would take probably the first part or the main part, if you could go through the Thursday and Friday, your what you send out, what's the name in English?
Okay.
And look at it. And I mean, one of my main question would be,
yes,
I still think I need to learn about my attitude and the management. And if you just go, you have had this now deal, when you send out an alert, then you send later the chart and how should I deal with this,
Okay, so that's a very good point. And when we can zone down on one particular stock, I can give you my thinking as to why I expect the stock to go higher, and on Friday it went lower. So I will go into that. So let's start with that, and that's a terrific point to begin. And other questions will come up as we go through that. Okay.
Okay.
So
good.
very good. And now is a company that I know very well, ServiceNow. It is one of the world's top software automation companies, which work with primarily medium and large corporate companies, and they make sure that everything is virtualized in the cloud, and all their supply chain management and working remotely and everything that matters comes into play. So the demand for ServiceNow has gone up exponentially, and their CEO was on Thursday, and the bottom line is that the stock has a very bright future. So we're going to look at the trading aspect of it, and I just gave you a quick fundamental preview of why I like the company. So let's start with that. So let's move on, minimize the screen, and bring in a chart of NOW. 1 second. Let me bring it in. Okay, there we go. It's chart of the market.
So you send out the first alert about entry 1 on.
Yeah, on this was when I got into now, on this candle, the day that Thursday, very, very powerful day. Friday, and again, I explained very much in detail as to the actions on Friday, where the markets were recovering from being down 900 points, and I do that on that previous webinar that I did yesterday morning. And once we do this and you listen to that one, all the points will be connected. And so let's start off with the broader picture right now, which will explain to you my thinking. So bottom line is, let me just get this. Okay, because everything is related to the market, obviously. So this was Thursday. A very powerful day, very powerful day. This was the 26th. Friday, we opened down. We opened down 900 points. We went up. Let me just zoom in. There we go. So we opened down 900 points, and we stayed around there for a bit. And all through the day, we started to slowly but surely recover. And at one point, we were only down about 300 points till about 2 p.m. Okay, till about 2 p.m. And this is the daily candle, what we call an inside day. The body of this candle is within the powerful thing. And one other point that I want to highlight to you, and I'll be talking about that in tonight's webinar, is the day that we ramped up 2,000 points, and that was on the 24th. The 24th being a Tuesday. This was Monday. Established a significant low, and then on Tuesday we gapped up, massive move. The following day we had a pattern on the candle which is known as a doji, where the body of the candle is in the middle of the two tails or wicks. Okay, so
that's a neutral signal. A doji is a neutral signal. It can go either way.
The doji can be a neutral signal. It's basically a signal of indecision, but indecision can also have a bias. Is the bias up or down? Okay, so what we basically try to look at, this is a powerful doji because the body of the candle, even though it's a doji, was higher than the previous day's high. All right.
Okay.
Exactly.
Yes, sir.
So this is something that is applicable to both stocks and indices. And again, as we both know very well, that whether it's candlesticks, whether it's the market, we are trying to game or calculate the mathematical probability of what will happen based on these candlesticks, because the candlesticks are showing us money flows. And that's exactly what it is. So bottom line is, so this was a more of a positive upside bias doji right there. And the following day it played out like magic, monster day. Okay, so this so bottom line is, inside day green doji, good to go. Now following day, Thursday, massive move higher. Companies just running like no one's business, and it's just one of those days where you want to be taking profits because you have basically set yourself up over the previous 48 hours, and then you get this, or even if you hadn't got a chance to set up the previous 48 hours, if you had set yourself up on different on the overall market or particular individual stocks, tech stocks, let's say for example, ServiceNow and OW is one of them, then it was a monster move. Now on these type of days, depending on what level you're getting in, the stock basically will perform accordingly. Now the following day, this is the most important thing. On Friday, we opened down 900. We climbed up to what's being down only 300. That means we reversed 600 points from the bottom. And then at 2 p.m., and this is explained very clearly on my previous VIX video, we had a massive sell program, which looked like this. Without bringing just bear with me 1 second. And this is something that we have to get used to. They're completely beyond our control. And this is what happened. So we had a very nice formation, what we call a consolidation flag. And that is this. Let me just grab the pen color. 1 second. Blue. Okay. So we had a consolidation pattern. This is 27 at 12 a.m. in the morning. Markets begin around 9:30. Right there. It's still within the technical consolidation panel, still above the uptrend line. This is the uptrend line. I kept on following it very, very closely. Then as the day progressed, we created a minor double bottom, and then we broke out of the consolidation pattern at around, I believe, around 12:30, 1 o'clock, and then we made a very sharp move higher. That sharp move continuation under normal circumstances would have gone and hit the upper end of this move, which was the previous day's high, and that would have been 26.34. However, at 2 p.m. right there, at around 2 p.m. or 2:15, something like that, there were two massive sell programs, 1, 2, and you can see that in the form of two large red candles, and that, in my estimation, and I explained this earlier, was two powerful multi-billion-dollar forced margin sellouts that the margin directors wanted to execute prior to the weekend starting. Okay, there was
the weekend thing. Yes.
Okay, this is the weekend starting, and this has occurred previously. And again, We are still following the support levels. We are still following what it's doing. So it didn't close below the major support level, which is around 2,500, because if it had done that, then the other particular S&P chart would have not had an inside day. It would basically be a situation where, and I'll show that to you in a second, it would be a situation where, put this a little bit on the side so we can see it. 1 second. There we go. It all ties in together. Okay, so let's bring this in, show this both. Perfect. And so you would have had a situation where this inside day, which is still a doji, but it's a weaker doji than this one. And this one, if you notice, was in the middle of the body, was in the middle of the two tails or wicks, which is very good. And this is slightly lower than that. So this, if we had closed down, there was a possibility of that happening below the 2,500 level, we would have more automated selling, and we would have come back towards the lower end of this consolidation channel, which can be construed as a bull flag, this one. Okay, and we would have closed around here, which is about 2460, and that means this candle would have closed below or close to it, below or at least at the bottom of this large Thursday's candle. Now these things are extremely important because they're giving us some signals as to the intentions of well, in this particular case, intentions of the black boxes or the algorithmic programs. Now, there's a couple of other things going on here, which is that this green arrow that's been generated, that's not being generated by me. That is generated by the automated scripts, Thinkorswim, based on their signals, which are coded inside these charts. Okay, just remember that this was not this is not something that I put there. So that stayed intact. The 5-day moving average still moving higher. This is still moving higher. So all that. So yeah, so that's what happened. Now, saying all that, that happened at 2 o'clock. That was a sharp sell-off. There's no question about it. And we lost 600 points, and basically closed at the bottom of this near the low of the day. And that's where we are right now. Now, we are here to talk about NOW. So let's jump into that. So that is the frontal picture of what happened on Friday on the overall market. Now, let's take a look at NOW. Let me just clean out this chart, and this is it. Okay. So if you
may I ask something? Sorry.
Of course. Go ahead.
Sorry. Could you please on the constructed chart, on the white one, show me when you decided to buy? You know, it's you explained very nicely
when I decided to buy. When I decided to buy what? NOW?
Yes.
Okay, I decided to buy NOW, and the white chart is not showing NOW. I'll stick to ServiceNow's chart. The stock, I decided to buy the stock at around this level, right there. Okay, and the stock actually went up to almost $295. This is Thursday, attacked and closed at the high of the day. Remember one thing, from a technical perspective, just from a technical perspective, this is one of the most bullish formations that you can buy into, regardless of what happened on Friday. It is one of the most bullish formations you can buy into when a stock has a massive bullish engulfing candle. This engulfed the price movement here. The price movement on the stock engulfed multiple days of red candles. Okay, so this is very powerful. This is the end of the day, Thursday, at around 295, looking really good. And then what was I going to say? And it closed above the 20-day moving average. Okay, it closed above the 20-day moving average by a fraction of $1 or $2. So from a technical perspective, that's a big plus. Now, this is something that all traders have to accept. Even though we don't like it, We have to accept it. So Friday opens down 900 points. And the key is that we just have to make a decision at that point. So the decision that I have to make is, do I add to the cheap calls that went down based on what happened in the market that I just explained to you on the other side, or do I bail? I decided that I am going to buy the cheap calls because I do believe, based on the charts and of course other fundamental reasons of the market and stuff, that at least there is a probability, given that I have a full week left for this particular option to play out, the cheap ones, that this stock also closed. This is also an inside day. It did not close below 268, because if it had closed below 268 right there, let me just grab the pen again. If I one sec. If it had closed below this level, then this pattern, which I'm going to go over with you very closely, I got into the stock around this level, went up very nicely. If we did not have a drop of 900 points on Friday, the stock could have easily broken out and gone towards the 34 day moving average, which is approximately around 315. Those calls would have been double, more than a double, no question about it.
And then you would have sold them.
I'm sorry, what?
Then you would have sold them at the 34 or
absolutely. I'd have sold not the whole thing. I would have sold. Yes, there are two options you can do. That's a very good question. So what's the strategy if it's approaching the major moving averages and completing this pattern, if you want to look at it? Okay.
Make sure you call the 50, right?
Well, the difference between the 34 and the 50 is only a few points. All right. This is how a technical professional trader thinks. You're moving up. I have a bunch of calls, so it's not just one or two. So the bottom line is, I would be scaling out of them, and then I would basically, as I explained to you in the previous webinar, I have the 320 calls, strike price. The calls would be up substantially. I would sell them, and then I would buy the 325, if not the 330 calls, which would correlate to this gap fill right here. This correlate to the gap fill right here. So that's what I would do, because by that time the cheap calls, which we bought the 320 calls, would have been worth quite a lot more, and I wanna keep more of my profits in my pocket. I would be buying the cheaper calls of the 325 and the 330, which would deliver the bills. And if it didn't go there, even if it went down a little bit, the bulk of my money, the profits, would still be in my pocket.
May I ask a question now? A very important question for me.
Yeah.
Let's say you would have sold them for, I just take for $2,000.
Go ahead.
For how much would you reinvest them? Like 1,000? For how much you would go in again? For 1,000?
So let's say the profit aggregate, I call it PPR plus, okay, is $2,000. So what I would do is I would scale in. I don't jump in full blast. So if you have profits of 2,000, and let's say you had originally put in your actual capital, which I'm going to say
1,000.
yes, exactly. So I'm going to say OR, original capital, 1,000. What the rule of the thumb is, which is always a smart way of doing it, you want to just play with, want to play with the $1,000, and this way the other 1,000 stays in your cash account, and that's called in the business playing with house money. Okay, so even if you lost this 1,000, then your original capital is still there for you, and so that's what in the business they call it, playing with house money. You're playing with your winnings. Now the other way to do it in this type of volatile markets, you initially entry one, let's call it E1, you go in with depending on the price of the call, of course they're much cheaper now, you go in with 500. You monitor whether or not it is starting to depending on the characteristic of the candle, if it's still kind of nice green or a or a doji type of green, you might want to add another 200. So you don't necessarily need to bulk in all your profits at one go, and you could scale in with the initial amount. Generally, what I do is if I want to buy, let's say, 10 calls of something which is at, let's say, we're sticking to this number here. Let's say 10 calls at 4. Okay, what I will do is I will buy 4. This is what I do all day long. I mean, most of the time. I will buy the 4 at 4. It slips and slides during the day because of intraday volatility. Depending on that, I will add another 2 at, let's say, 3. If the structure remains the same and there is a sharp pullback intraday, like happened with on Friday, I will add another 2 at let's say 2. And at this point, I have 8 calls with an average cost of $9. And I have brought
$9.
4 and 3, 4 and 3, 7, and 2 is 9. So you have 8 calls at what do you call it? You have to divide it. It's not $9.
Yes.
That's not the average cost. The average cost is 9 divided by 8. So you are looking at an average cost basis of $1.13 or $1.12. You got it? So that would be my strategy based on the fact that it was still an inside day and I have reduced my cost substantially. So the following day, which has happened a lot, look at this. This was a complete inverted hammer, and then the market went up. I mean, the stock went up big time. This was just in the month of March. Here you have another mixed signal, and with the 5-day moving average still moving down. Here we have a positive with a 5-day moving average is still moving up, which is definitely a plus. And I'm going to show you the internals, which are very clear that they are also, despite the pullback and despite the sharp pullback in the market, which affected all stocks at 2 p.m., the internals are still pointing up. And even though short term, the McClellan oscillator, because of the sharp move on the stock, is a little bit overbought. But I will give more weighting at this point to the curvature of the stochastics because I have 7 days left. I'm sorry, I have 5 trading days left. So that's the way I would do it. I wouldn't take the old 1,000 and plunk it in. I would basically break it down into pieces and at that point scale in slowly.
2 questions, sorry.
Go
questions,
ahead.
may I?
Yeah.
First of all, why did you decide to
go ahead.
take it a shorter term, a week, and not being safer and take it on the 17th of April?
Okay, that's a very good question. Number one, the 17th April calls are more expensive.
Yeah,
far more expensive. Okay, I could have certainly done that. Secondly, I expect given the nature of what the markets are going through, I did not want to buy that much time and pay more, knowing that whatever happens this week will in some way or form show me a light as to what will happen next week. So I'm keeping most of my trades, and I know I have April 17th on a bunch of things, but most of my trades, if I have a week left, the uncertainty is so big in the markets at this point, despite the fact that we are recovering. The fact is we could very well have another 600-point down day just for no other reason other than the fact that this massive amount of negative news that's hitting the market, especially on the coronavirus side, and that it can detect it. So that's the reason. I did not want to pay the expensive premium. And if you notice lately, the premiums have very wide spreads because of the fact there are no human. It's like disgusting. I mean, I put out 2 tweets out there because it's really frustrating. I'm trying to buy something, and on the bid it's $2, on the ask it's 5. And so trying to play in the middle becomes a very frustrating game. But hey, that's just the way it is. So bottom line is that's the reason. I did not want to pay the high premium, and given the uncertainty and the volatility on the market, I wanted to see the action on this thing before I went out and bought the April 17 calls.
May I ask something?
Yes.
Do you ever put stops? I mean, especially in these widespread times, do you ever put
I
stops
do.
on
No,
your
no.
options?
I have
No.
mental stops. If I put physical
Okay.
stops on my options, they will kill
Yeah.
me.
Yeah.
It goes,
Okay.
let's say, for example, somebody bought option middle of the day. I put out some trades out there. And by the end of the day, when we had that quick pullback, you'd be gone. And then we don't know what's going to happen tomorrow, of course. But the fact is that multiple times I've seen, I put the stops, they take me out end of the day. And then the following morning, the market gaps open and I'm not in that position anymore because they've taken it away from me. So
Yeah.
physical stops can be done, and it can be done only for larger positions that you want to protect. And you have, you know, and I've covered this in other webinars, but
Yeah.
I use mental stops.
Okay, good.
I use mental
Um,
stops.
yeah.
Go ahead.
Okay, great. Thank you very much. Oh, it's such a just to the situation. Thank you very
Mm-hmm.
much for the big insight. The situation I'd like to understand is if it could go on the Twitter stream, and because normally you send out the first entry sell buy signal alert, and then you
Mm-hmm.
send out a structured chart.
Sure. Well, that's
And
on the that's on the first one, and then I update as needed. Yeah.
exactly. Could we do that once together? Because this is a situation I'm very interested in. You know,
No,
when I
one
got the,
second. Let me try to understand your question. Do what together?
uh, you know, like going in the Twitter feed. Sorry, my
Yeah.
English, you know, my English is
No, no,
not
no.
so good. So
That's fine. Your English is perfect.
sorry
Go ahead,
about
sir.
that.
Yeah.
It's if you could go for a buy alert
Mm-hmm.
and then watch after this buy alert the first structured chart you send out.
Mm-hmm.
So how I could deal with this? You know, I bought it now. I watch
Mm-hmm.
at the chart, and
Mm-hmm.
then what should I mentally prepare for? You know what I
Okay.
mean? You
I'm
know?
trying to understand it. So I'm finding the alert. So when let me just get this right. I put the alert and then I attach a chart with it, which is
Exactly. And how?
okay.
Yeah.
Yeah.
And
Go ahead.
how should I mentally prepare on the thing I bought, which
Yeah.
is depending on this chart, you know?
Okay. How should you mentally prepare? Well, that's a philosophical question, okay? Because that comes into the realm of technical philosophy. Maybe we should start a subject like that on Twitter. So how you should mentally prepare and give you that's a very
Then
good
you send
question,
out,
actually.
yeah,
Yeah.
your buy alert. I bought it, and then you send out a white chart, you know, the white
Yeah, I mean,
charts. I
I
love your
do it.
white
I
charts.
I do it simultaneously, like that at the same
Yeah,
time. Okay. Now,
exactly. And
how you
then what
how you
should I do?
mentally prepare is that, let's say you want to buy two calls. Okay.
Technically
Technically, you want
prepare.
to
Yeah,
buy two calls. So when you
yeah,
buy when you buy, let's say you want to buy four calls. So you bought the first two at, let's say, $1.20 or something, $1.50. Okay. So be mentally prepared that the machines over the next 5 minutes will bring it down to $1.
yeah,
That's what I'm telling you right now, because that's exactly what happens. So be mentally prepared that from the point of entry, most of the times, that they will bring it down slightly. Okay, they will bring it down slightly immediately after you buy it. So that's one mental preparation. So don't panic over that. The
yeah.
second thing
No,
that you have to
yeah,
do is let me get this out and I'll show you. The second thing that you have to do once you look at the big picture and you enter, you have to immediately switch to the 15-minute chart, for example, or
yeah,
immediately switch to the 1 hour chart to get an
yeah.
idea about the sense of volatility that comes about. And this is Thursday and Friday. Okay, there we go. So this is Thursday and Friday. Let me get Thursday and Friday in the picture. There we go. So we got into the stock around this level. The stock basically climbed very nicely all the way up, looking really good. A definitive bull flag there.
Mm.
Definitive bull flag. Can't get any better than this. Obviously, we were not in the stock here. We had other much great winning positions. But whichever the case, if I was there on Wednesday, then I would have sold and taken some substantial profits and re-entered based on this formation somewhere at this level, which is pretty much where I re-entered, but I didn't make the profits because I wasn't there the day before. Okay, so
Mhm.
and this happened on This happened on Friday with everything. It reached a bottom at around the 270 level, and then it climbed very nicely to almost 280. And by 3 o'clock, just because of that one big sell program, which was not an individual stock sell program, just so you know, that was an exchange traded fund sell program where they sell baskets, oh no, the full basket. And I'm sure they sold a basket of tech stocks and the XLF, things like that. And the next thing you know, the stock basically did this. So bottom line is, from a answer to that question, it's a very difficult question to answer, but generally when you enter a trade, be prepared that the automated market makers will bring your options price down. And it's not like a guarantee. You could shoot up immediately too. We've had many of those. And if it shoots up, let's say you bought 2 calls and it goes from 2 to 3 within a matter of 15 minutes to 20 minutes, I say take some profit, because the point is that you can oversell one, because this way you have a level of mental confidence. We're talking about the mental part that, oh, great, I just took 50% of my profit, and I still have half my position left. You can try to re-enter a little bit more because you don't want to be stuck with just one call. You can certainly do that depending on what it looks like. So from a mental standpoint, you switch to the 1 hour chart to see the more intraday movements. You can switch to the, and because I have multiple screens, I have 15-minute, 1 hour like set up. So I'm seeing that. I'm not jumping on it, but I'm seeing it. And 1 second. Let me just get this thing. Here's your 15-minute. Let me clean this mess out. Okay. Here's your 15-minute.
That's my favorite.
The 15 minute is great because the 15 minute is giving you a peek into the future, and it's also giving you a peek into the past as to what happened. So from this standpoint, grabbing the pen again, we can easily draw a range. 295 on the top. We need we'd love to get a massive break over 295. We can see that the stock has a low end of around 260. We can also see that it has a mid-range, or slightly higher than the mid-range, of around 285, and also a mid-range support of 265. So now we have a structure in place. Let me give you how to mentally prepare. And I talked about this on that VIX video, and of course I'll be explaining this on tonight's webinar where we forecast markets. I would not be one bit surprised that the stock opens down if the markets open down, and there's a possibility of that purely based on technicals, not my feelings. Okay, at somewhere towards these levels, and as long as these levels hold, the 260, 265 level holds, I will be adding to the cheaper, at that point, cheaper calls to bring my cost basis down tremendously. Of course, I'll be looking on the front end, which is the SPX and the EX, to see, and of course I look at the NASDAQ charts too, the NDX, to see whether or not this is a bounce probability. Just because it reaches 260, there's no guarantee that it's going to bounce, or what is the probability. But once I mix that up in my head and I can see that the stock basically is vacillating around here, that means there are some buy programs who are ready to buy the stock at this level. And then let's say, for example, the market opens down like it does a lot, and then it kind of like vacillates around till 10:30, 11 o'clock, boom, it starts to move. Then I know that I have a fair shot, because by this time my cost base is going to be substantially lower, to sell first at this level, 285, because that would be a 25-point move. And of course, if it's moving forward, I would be, depending on the amount of profit that I have, because my cost basis will be substantially lower, I will basically at that point take out a chunk of money, leaving some in place. Again, depending on the front end of the market. So that's how you have to. So in answer to your question, there is no simple answer, but the more constructive answer is that once you focus on the 15-minute chart and the 1 hour chart, you'll be more mentally prepared to do what is needed. And I will, of course, put it out, given the fact that this is one of our trading stocks at this point.
What is the 1 minute and the 5 minute good for?
I don't do the 1 and 5 minutes because it's too much for me.
They make you nervous, right?
I mean, I mean, it's fine. I mean, you can certainly take a look at it, but the 1 minute, let me clean this out. The 1 minute chart is actually pretty good because it kind of gives you a nice pattern, right? Because the 1 minute chart, minute chart, let's say this is Friday. This is Friday's 1 minute chart. So you can still see, I mean, I'll be honest with you, I don't use it that much, but honestly speaking, it's giving you a nice, it's also giving you a nice range. This was when the markets opened at 9:30. So you can see that the same range that I described to you is also visible on the 1 minute chart. So you can certainly use that, but it's just too much movement. Too much movement. Now, one second. The 5 minute chart is actually better. The 5 minute chart in many ways mimics the 15-minute chart, even though it's more noisy. You know what I'm saying? So yeah, I use the 5 minute, by the way. I look at it. And on fast moving stocks, some of those fast moving things I buy, and then all of a sudden they start moving fast, like a biotech type of stock on some news and this and that. I use the 5 minute quite often.
I have no question here. How reliable are on the 1 minute the candlesticks? You know, you got a little hammer, you got a little inverted hammer, like
it's not. One sec. It's not reliable because they disappear in 1 minute.
Exactly.
And they disappear. The 15-minute chart is more reliable, even though there's a lot of noise. The 1 hour chart is very reliable overall. Okay, based on what was going on till 2 o'clock. This was actually Friday 9 a.m. They started to move up. This is more reliable, and it can be used as a very effective exit entry point. The 4 hour. The 4 hour is the closest cousin to the daily chart, and that is of course is quite reliable. And the daily chart is, in my opinion, for people who want to swing trade, is very reliable, and that the reliability is based on the fact that you're seeing a technical turn on the 5-day moving average. Hopefully it stays that way. Very nice, despite the stock coming down from 284 and closing at 272, 274. You did not see any material impact on the internals. And in tandem with this, I want to show you something that I've been.
May I ask something? Sorry, question. Sorry.
Yeah, go ahead. Go ahead.
Because I know you're very knowledgeable about something, but sometimes we have. You could say, could one say as a rule that the candlesticks, the single candlestick starts being sort of reliable starting from the 15 minutes or from the hourly, or?
It starts to become more reliable from the hourly.
Hourly, okay.
Correct.
Good. That's good to know. You're looking at the 5 minutes and you think, oh, that's a hammer. Oh no, it's gone.
I know. And just keep in mind, the market circumstances we're living through right now are very unusual and abnormal, right? 2,000 points up, 1,000 points down. This cannot continue forever, just so you know that. It cannot. It is not physically possible. It's the law of nature. So the fact is, you have to adapt yourself to the current market circumstances. That's why the 5-15 minute is reliable. 1 hour is more reliable, but under slightly less volatility, you can rely on a 15 minute much better than you can do right now. You can even rely on a 5 minute because there is a pattern that's developing that won't disappear in 5 minutes. So that's what's something very, very important to keep in mind, the market conditions. Now,
how about the VIX? If you want to be very sensitive about the VIX, would the first little trend in the VIX,
let me stop you for a second. The video that I did on the VIX is so good that you will, so every single question that's going on through your head, as in direct movement between the front end of the market and the back end of the market, which is the VIX, the opposite of the market, it will be answered. Now, I want to show you from a trading perspective the Darvas box. Okay, that's something that I have used before, and I reintroduced it again, and you will see that in a bunch of my charts. So let me do this. So as we are covering this, I just want to leave, we're not leaving the stock, but we'll look at another one. You can also see that we have in my opinion, it retested this downtrend line at the 240 level twice, which is very powerful. And I believe that this is the best that I'm hoping for under the circumstances. A move close or a retest of the 34 and the 50-day moving average. I am not expecting the stock to go to 340, and I could be dead wrong, but I'm just saying, okay? So this is what I consider from a technical perspective on an optimistic scenario. That's exactly what it was doing. It's still within the body of the candle. So this is the most that I'm expecting, around that 320 level. Got it?
Okay. Yes.
Okay. By this time, the stochastics will be overbought.
Yeah.
And of course, now if you
Gonna
don't want to
hit
look
the
at it,
hand on the
if you want to look at it from a longer term perspective, the stock could very well attack its highs. I'm not kidding you, because this company is very similar to what one of our biggest winners consistently, Teladoc,
Yes.
okay, and Zoom, because this is the software, and Zoom is a software company too. It's but it's video conferencing. But in this particular case, the demand for ServiceNow products is so high because nobody's in the physical space anymore working. Everybody is remote. New York is empty. You know what I'm saying? And the demands of large corporations to manage their global, worldwide supply chains is so big that these are the companies like ServiceNow, which are so the fact. And don't be surprised if you start hearing this in the same sentence as Zoom and Teladoc, which are talked about quite a bit in the media. ServiceNow definitely one. So if that's the case, do not be surprised if it does a moonshot. Okay. So that's something to keep. That's my fundamental reasoning behind the head. This is not a company that's like Intel, like, oh my God, PC demand is lower. Software on demand is or SaaS, basically software as a service. That's what they call it, SaaS. Is just going through the roof right now because the world has changed.
Yes.
So that's why this is something that I want to stick to. And the CEO, like openly said, their demand is skyrocketing. They're not seeing material disruption in their revenues. And I was like, this is exactly what we want to hear from a CEO. We don't want to hear from a CEO that they don't know what their earnings are going to be. You know what I'm saying? So that's why. Now, let me, if you allow me, I'd like to show you the Darvas box, okay? Which is a great trading tool. Nicholas Darvas, you can read up on him on Investopedia.
Darvas box. Okay.
I'm sorry, what?
How you call it, Darvas box or
Darvas, D-A-R-V-A-S. Here, I'll show you.
okay.
Yeah, I've shown this a bit on multiple stuff here. Darvas, D-A-R-V-A-S. It's a technical term. It's called the Darvas box. So we're going to bring in the Darvas box.
Well,
very reliable technical tool and very useful for, I would consider to be shorter term intraday or 2 or 3 day type of trading. So let's look at the 1 hour on the Darvas box. Let's take out all the lines. So it's cleaner. Let's start off with the 5 minute. Okay. Okay.
No good. Okay.
On the Darvas box, when I show it, this is the lower end of the Darvas. Okay, the red line. The green line, this is more easier to see. Here's the red line, and here is the green line. So upper Darvas, lower Darvas. The dotted line in the middle is known as VWAP. Okay, you can also go to Investopedia and read it. VWAP simply means value weighted average price, like where the stock should be going to. Now they say that institutional traders use VWAP a lot, but in my, I mean, I don't know anymore because the machines, I don't know if they use VWAP or what, because they're just moving at their own speed. If you look at the 5 minute, the stock should make if you want to just trade it for a couple of points, you can expect it to move up towards the VWAP. And you basically have like for fast traders, you have a 4-point move from where it closed at, from the lower Darvas to here. Now this is not giving me an idea. This is not giving me an idea on what the stock will do on a 15-minute basis. It's too short. So on a 15-minute basis, if you look at it, This was Friday. So let's look at Friday on the Darvas, okay? So this was Friday. So let's say, for example, it hit the lower end of the Darvas at 945, right there. Price at that point is 271. Within 15 minutes, 30 minutes, it's at 276. Comes back, retests the lower Darvas repeatedly, jumps up by 11:15 to 280. Yeah, 280. Comes back and retests the same support level again. The Darvas is right there, and then starts to climb all the way up again towards 279. It slipped below the Darvas at this point. Normally, you don't have slippage below the Darvas, but anyway, there is. Moved all the way up to the upper end of the Darvas at 281. So what I'm trying to explain to you is you can actually just on your side just go apply the Darvas box, and you can trade in between the boxes quite well. Let's look at the 1 hour. Let's look at the 1 hour. On the 1 hour, you can see here that the range on the stock, well, this goes back 2 weeks, so much longer. It's 238 to 302. That's a $70 range. That's not what I'm looking for. So on the 1 hour, you can use these lines, which are basically the Bollinger Bands, as a measure of within the large Darvas box, as a measure of how the stock can trade. 298 to 265 is 33 points, but that's because the markets are so volatile. So you feel free to use the Darvas box at times. Just to give you an example on Netflix.
Oh, Netflix! I got pounded by Netflix all week. You know, it starts. It's always selling off, and I missed it about 4 days. You know.
Well, Netflix was not selling off on Friday, so I don't know what you're talking about. It's only the 2 p.m.
Monday to Thursday.
3 p.m. it came down. So let me correct you 1 second. I'm not here to change your mind, but I will correct factual errors. When you say it's always selling off, it's not correct at all. Netflix opened up on Friday at around $355 and went up $14. So
Yeah,
where is the sell-off? The sell-off only came because of that forced margin sell that happened at 3 p.m. So that is incorrect. Let me finish, because if somebody's going to make a statement, I have to show them factually they're wrong. Netflix does not just sell off. Here is another example. Thursday, Netflix opens up, and we've been making money on Netflix. Okay, Netflix opens up. Netflix opens up at 9 o'clock. Massive move. It literally goes berserk. 342 thing, then it vacillates around and then makes another move. So from the bottom, from 342 to 363, Netflix was one of the strongest stocks in the market. And even if somebody held it and they bought it at this level, no one buys. I mean, the fast traders who are, if you have time, like looking at the screen, you can always get in at these levels. Not necessarily exact bottom, but somewhere in here, you would still be higher the following day when it was at 355, and it makes another big run to 368. So net from 339, let's call it 340, to 367, the stock is up 30 points in 2 days. The pattern is still intact as an inverse head and shoulder, so I'm not quite sure. Look, this pattern is still, despite the sell-off at 3 p.m. on Friday, which is completely out of our control, is still destined to hit 380. And Netflix, many days, has been up against the market when all the other techs are red, because Netflix is a stay-at-home play because of this coronavirus crisis that's been happening. So Netflix is a great stock, very fast moving though, very fast moving. The options are not that expensive, but if you're going to trade Netflix, you can buy with Netflix. In my opinion, the numbers are going to be pretty damn good. That's the one you can buy the April 17th type of things, even though the cost of the options are pretty high these days. And that's something I've pointed out. So Netflix is what we're talking about, and it's a good point that you brought this Netflix up, is Netflix's, if I look at Netflix's daily chart, and then this is the Darvas box. So this one, I'm just going to make it a little bit, lines a little bit thinner so people can see it. There. Let me make this. This is an uptrend channel that Netflix is in, and it's a damn good looking chart from a standpoint of a Netflix earnings are going to be good. I'm obviously going to put money down on that, but they're given the circumstances that the world has moved into, Netflix is a big beneficiary of that. If you want to look at Netflix from a standpoint of a beautiful cup and handle, inverse head and shoulder, the stock is destined for 380, and it went to 380 just 3 days ago this week, and I believe the stock will hit 400.
Okay.
And that's my opinion, based on technicals, and on top of that, based on the fact that they are in a prime position right now with people stuck in their homes.
Okay.
So
May
yeah,
I,
sure,
I
go
ask
ahead.
you, as you know, we're approaching Mr. Time. I'm having a thing that's really going through my thing. Could we please go to the alert when you said to buy now? You know,
Yeah.
let's forget what really happens. This is about
Okay.
planning the
Planning.
trades.
Yeah,
I can
of course.
explain you what I'm thinking about.
Okay, 1 second. I'm going to get this out. I'm going to get the Twitter feed and find the. Okay, so you want me to go back to Thursday, which was the day that I put out the trade,
Yes, and the chart.
which was the 26th. Okay. Well, the chart it's there, but it's the same chart that I just explained to you.
Okay, wasn't it the white one?
1 second. This is SPY. Oh, I didn't put any chart on that the white one is investing.com. I have no charts of ServiceNow on investing.com. So I'm not
Okay.
quite sure, but I will go back. Yeah. No, I don't.
Or take any trade. It doesn't need to be now. Just any trade. You
Oh,
know.
any trade. Okay, okay,
Yeah.
okay. All right. So here was Netflix. This one. Oh, this is a good looking chart. Okay. This is the chart that I like a lot. This is of not of Thinkorswim. This is of Quad, which I call my Algo HFT platform. It's a very good looking chart. Look at the slow stochastics. Look at this was before we got that sell program. It actually went up to 295. And this is a very clean looking chart. I believe the stock will go up there. So just keep this one in mind too. This is my most important indicator, the S stock or the slow stochastic. This indicator keeps me in the trade, or it tells me whether or not I should bail. So the S stock.
Okay.
1 second. The S stock. This platform is called Quad, QUODD, and I had put it down here. Quad Algo HFT Swing Roadmap. This is primarily for swing traders. Now going back to what you were asking on the first trade, entry now, April 3rd, 220. It's actually 320, and then I put the chart up there. Okay.
Yes. Okay. Okay. The entry was how much? It was 220. On what date? Sorry.
This was April 26th. I'm sorry, March 26th. And and it's not March 26th. It's not here. The correction is April 3rd, 320 calls.
April 3rd.
Yep, right there, March 26th. Here's the time.
You know, it's very small on my screen. Sorry about that.
Okay, 11:44.
Yes.
Well, let me finish. 11:44 a.m.
How much did you pay for that?
I don't know offhand, but I will tell you what the price is on the price of the stock. 1 second. Yeah, because I don't have my position screen open. So let's look at the price of the stock at 11:44, March 26th. Okay.
Yeah.
Yeah. And these are way out of the money. I didn't buy. I just wanted to buy the cheaper calls. So I believe they were like a $1.60, $1.70, less than $2. Yep.
Okay. Yeah.
Because they were lottos. So 1 second. Let me finish my thought. Okay. So let's look at March 26th, which is Thursday, 11:44. So I bought the stock. I'm going to mark it for you right here, so you have an idea where the entry was. 11:44 is right here. The stock price at that time was around 284. So this was my first entry.
Yes.
Okay, and then
the
the
chart.
stock.
Yeah.
and the stock went up sharply. Right after that, pulled back, retested that level, and went up sharply into the close on Thursday at 295.
Okay, and
So
the chart you sent out. Yeah.
Go ahead.
Sorry. You know, what I try to do here is, I'm not a day trader, so I
I
try
know.
to find a concept of, you
Okay, so
send out.
let me stop you for a second. If you're not a you're confused in your head. If you're not a day trader, then stick to the 1 hour and the daily charts.
Yes, I know, but what
That's
I
all.
try to do,
Mm-hmm.
you know, that I try to find a concept from here that I can work more with sell orders. You know, you send out the trades
Yep.
with the chart. I can
Mm-hmm.
plan my sell order, my limit sell order.
Mm-hmm.
That's what I try to see. You know, this is
Okay,
why
so
I'm insisting.
here is a simple rule you can use. I understand where you're coming from. You entered the trade, but you can't watch the screen right after that because you're stuck at work,
Yeah,
correct? So let's assume that.
yeah, exactly.
So
Yeah,
what you should do, put a sell order 50% higher. So if you bought it at $2, then put a sell order at $3. If it gets
yeah,
there, you get taken out because you don't have
yeah,
the time to manage that trade. So that would be the simplest way of doing it. You should normally have, depending on the size of the trade. This is something very important. Position sizing is critical. So if you
yeah,
put in for $200 versus $2,000, depending on the size of your account, traders who put in $10,000, so they will basically say, hey, if I'm up 40% or even 20%, I'll sell half my position. So they put sell orders out there based on that because it's the size of
okay,
the money that matters. But if you have, let's say, one contract or two contracts, it doesn't matter if it goes up 50% because it doesn't make any
yeah,
material monetary difference to your thing. So this is a concept that all traders have to understand. So let's say you put 2,000 bucks, okay,
yeah,
and you just want to make 400 bucks on that. So go ahead and put a sell order 20% higher than where you are, and and they'll give you your 400. The stock will most
mhm,
probably go higher than that, but you just wanted to make that 20%. You have to have your expectations, or you might want to make 40%, and the stock very well might do that. And it did that right after it was I had put it out there. So that was the only way you can do sell orders.
okay. And it's not that I could watch on the look at the chart you're sending
Okay.
with and saying, okay, the price I'm going to put in, analyze it on the chart you send out with the buy alert.
What you're trying to say is you're trying to figure out what the exact option price will be based on my 15-minute charter,
Not
or what?
exact, but what's the potential of it, you know?
Yeah, exactly. Well, the potential of it, like I said, generally speaking, I can't determine, given that the nature of the markets, especially right now, I can't give an exact number, but rule of the thumb is easy 20 to 40% on a fast moving stock.
Okay. Okay.
Exactly. So on the low end, 20%; on the high end. So if it's a $2 stock, 20% is $2.40, and
Yeah.
40% is $2.80. So that's a rough rule of the thumb. Now, yeah,
Okay.
if you're asking for like what exact price you should put the sell limit order on, I can answer that question.
Okay, and
Hmm.
the thing would be, I mean, the white charts, I didn't really get what you said about the white charts, but on the white charts, you have those lines with the blue arrows, you know, you told me
Okay,
last time,
okay,
that's
okay.
where,
Okay, the white charts are very different. The white charts, and don't say white charts, say investing.com charts, okay?
okay, sorry.
Yeah. I mean, as a trader, you should keep that in mind.
No.
So let's go back to the most of the times that I am showing, the majority of my investing.com charts have to do with the overall market. Okay, so
Mhm.
these charts are absolute precision. Absolute
Mhm.
precision. Market opens
Absolutely.
down absolutely, because
Yeah.
and I used to say, oh, I'll kind of, now I'm like, I don't give bullshit. Like if they're this correct, I'm going to stick by it. So the point
Mm.
is, this is major support level. This is where the markets opened up around nine in the morning. Okay, it never broke this line, and by the end of the
Mhm.
day, and I do put stocks on investing.com, but not that many.
Okay.
Most of my stock charts are on the so-called dark charts, which is think or swim,
Mm.
and what do you call it, quad. All right,
Yeah.
the
Yeah.
two platforms
Okay.
that I showed you with the black
Yeah.
backgrounds.
Yeah.
So here This is what it looked like when the market opened up or so. And this is what it looked like, the same chart, looked like by the end of the day. This is what it looked like midday. Look at that. Absolutely beautiful. Massive buy program. Yeah, massive buy programs based on the fact the consolidation channel held, this support held. I even drew the projected. When I draw these lines, the dotted lines, it simply means a projected move. Okay, a projected move. This would be a very bullish projected move in the next week, which I think has a good chance of happening. Let's see. But right here, it hit this. It went all the way up here and boom, and then this, look, just keep an eye on this chart, and then I'll show you the next one. End of the day, this happened. So we got up there, nice green candles, and then right at that, and I had this line drawn from before, right at this neckline, if you want to call it, neckline. It's an inverse head and shoulder. Boom, the sell programs came in. So the quote unquote white charts or investing.com charts are primarily to show movements in the market and not necessarily not on the individual. I do show individual stocks, and if you'd like, I'd like to show you the.
Can I ask something here too? Sorry.
Of course, don't be sorry. Yeah, go ahead.
Could you, the numbers, the colors of the numbers, you know, I know the colors of the moving averages, of the resistance line, support line, thick and thin, but the colors of the amounts.
On what platform are we talking about?
Investing.com.
Okay, so here's a daily chart of investing.com. Okay.
On the right, you have black.
Let me finish. Let me explain one thing very clearly. On the investing.com chart, and it's a very good question on your part. On the investing.com chart, I don't show moving averages.
Yes.
I don't show moving averages because I don't want to confuse too many lines on it. What I show investing.com most of the times are Fibonacci retracements. Okay. This is the longer term view of the market. Fibonacci retracements, supports and resistances, patterns. And those are the primary things that I show on the investing.com chart. I do not show any. Oh, I certainly show the stochastics. I keep it very simple so people have a broader view of what is going on. This was the market at the close, I believe, on what time was this? Yes. So this was the market. I'm just looking at the time that I put this on. 1 second. Yes, right after the close on the market, end of the week closing view. Okay. So this one, no moving of averages. Want people to keep an eye on the big picture at the same time trading the small picture. And this picture told me that this was it. Still a very clean inside day, still trending higher. No major material damage till 2464, which we might hit after hours on tonight, or maybe by early tomorrow if we come down. If it breaks this, then I change my thought process a bit as to whether or not we can sustain the move. So that answers your question. So what's your next question?
Detailed question on this chart. On the right side, you have figures. They're in a red box, in a blue box, or in a dark box.
I don't make those up. Those are automatically generated by investing.com.
And why are they red and blue or dark? Is there, what's the reason for it?
I guess the reason for, I don't know actually. Green is generally considered to be positive, upside, and red is resistance. So maybe that's what it is. Because every time that I draw a red line, which for support, it shows in red. So that's the answer to your question. Red is support, and green is upside resistance, which is good. And the blue mark, which I always put in thick blue dotted line, is the 50% Fibonacci retracement, where I do believe that if the markets have some sort of positive catalyst coming into between now and first week of April, that's where we're going. So that's the reason why I always have to remember, markets generally have a tendency, and stocks too, when they fall dramatically lower, they tend to gravitate towards the upper Fibonacci levels, and that final upper Fibonacci level before they get really hit again is the 50 Fib, or the Fib 50. Okay, and then of course along the way it moves back and forth on the 23.6, 38.2, and the final destination on a intermediate move in the market is the Fib 50. This is on the daily S&P 500 futures. Now, so on the same vein, while you're asking these good questions, I'd like to show you this one. And this I'm going to be explaining later on Sunday. This is, to me, like unbelievable. It has never happened in the history of the United States of America financial market. This is the Dow Jones Industrial Average.
Whoa.
So you're the first one who's hearing this, and anyone can, people who understand my charts know this. This is your Bollinger Bands, right?
Yeah.
We have stayed out of the Bollinger Band for 2 weeks in a row, even though this is a massive bullish engulfing candle. There is absolutely nothing negative about it. Nothing. Even if the market pulls back 300 points, 400 points over the Monday open, there, unless this candle turns red or loses this bullish engulfing thing, the markets are going higher, because it has never happened. This was December 24th, 2018, when we fell out of the Bollinger Band. Every single time, whether it's a stock or or the overall indices, and I've seen this happen over and over again, completely falls out because of extreme sell-offs below the weekly. This is the weekly. Yes, it's the weekly. Weekly.
Yes.
It has to at one point or another get back into the Bollinger Band. It's just a mathematical certainty. Now, it did try to go back into the Bollinger Band, as you know, okay, on Thursday. And then Friday closed here. So to me, I ask you, simple question without any analysis. When you look at this chart, does it look bullish or bearish? Don't think about what I'm thinking. What does your head say?
My head says it looks bullish.
Whatever your head says in the first 2 seconds is going to be the right answer, because pictures don't lie. So this is a bullish formation. Here it was 2 weeks out of the Bollinger Band. This was the week of December 18th and December 24th, 2018.
Yes.
It rushed back in. I'm not asking for the moon. I'm simply saying that we have a good shot to get back into the Bollinger, which it did on Thursday, but stay above the Bollinger and simply go a little bit higher to the last major bounce level, which was 23,151. That's how you read this chart. So if it breaks above this, all hell breaks loose. The market's going to go to 25,000. One single piece of news coming out that there is a slight deceleration of COVID cases and deaths in New York City, the market will jump 500 points in 3 seconds. I'm telling you right now, we're in the middle of this. The panic and the feeling of people around here, educated people, is like unbelievable, Patrick. And everybody's just so scared what is going on. And we are like basically right in New York City, even though we're on this side of the water, right? And Jersey City is also getting a large number of cases because so many New Yorkers live here, and I'm telling you, one single, just a psychological relief, like, oh my God. But right now we are getting into that tense stage where things are just like, tight. So yeah, so that's how you read this particular chart.
2 quick last questions.
Sure.
If I may. ER trades are always for the next day need to be sold off by the open, right or wrong?
The only time they're supposed to be sold off by the open is if I have a substantial profit and the market gaps up open. Like if the market gaps up 30 points, the E-minis gap up 30 points on Monday, I will take out a good amount of the fast-moving profits on things like ServiceNow, Netflix, TDOC, Zoom. Yes.
In the first 5 minutes, then.
Well, like we talked about in the previous session, I have to be careful about the prices they're going to give me in the first 5 minutes. Sometimes I sit back a little bit. But if it's a substantial move, I don't care what price they give me as long as I'm keeping most of my profits.
Okay.
Correct.
Last question for today. Thank you very much. It's awesome, really.
Thank you.
It's really, actually, did you get it when the last feedback I gave you written? It was a bit designed that you could use it for promotional reasons, you know, that you're, yeah, but
Oh,
that's not so.
so, oh yeah, what we do is we just put it out on the test. Oh, you did write one?
Yeah, the last time I wrote one, your thing is priceless, blah 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 blah. It was written in
Oh,
a
okay.
way that you could use it for
You know,
promotional reasons.
I'm surprised that it didn't show up, but I'm sure. And you did it on the testimonials on the website, sir?
No, I wrote it back directly on the Twitter, but I can do it
On
on the
the Twitter.
testimonial. Yes, but I'm
If you
gonna
can,
write you another one. Yes.
no problem. If it's on Twitter, I will certainly copy. Yeah, do it on the testimonials because it shows it directly came from you. On the Twitter, it also shows it directly came from you, but then I
Yeah,
have to repost it. Testimonials are great because I have pages of that from many years ago.
absolutely. Yes.
And yeah, I would really appreciate that. Thank
Just
you.
try
Now,
to give something back because it's really priceless what you're doing here. So
listen,
last week,
let me just give you one piece of thing. The fact that and I mean this, okay, because I think
yes,
you know me as a person quite well, is I'm a very tough guy when it comes to trading and stuff. I can be very tough with people, like, you know, as in just trying to help them. But the fact that we do these interactive sessions and people ask me, why do you do them? And it takes your time. It's not that much money. I said, it's not the money. It actually builds relationship, but more importantly, I enjoy it. And hearing that it's helping somebody else makes my efforts in running the service more fruitful, you know.
yes.
So it's a
I
mental
think
thing. So thank you for your words, because I don't need to
yeah,
run this service. I can trade my
everybody,
own book.
yeah,
Yeah, go
everybody
ahead.
should know about this service. You know, it's really priceless.
Thank you. Go
Last
ahead.
quick question. It's
Yes.
when you got the Twitter feed saying sell
Yeah,
full partial profits.
correct. What does it mean?
Um,
Go ahead.
question is,
Yeah.
is there also a situation I should just sell everything?
Yeah. So the two determinants on selling everything is that you're up a lot, and you
Yes.
know, let's say you put 2,000, you're up to 3,000.
Yes.
I don't mind. You see, some people say no, you should just sell part of it. I said in these kind of crazy markets, if I don't sell in the first, sometimes, if here's the rule, very simple rule. If the market opens up big, like 40, 50 points, like 40 to 50 handles on the S&P, gap open,
Yeah.
right?
Yeah.
My suggestion is sell full, because that's a big move.
Everything, all position, all cash.
Not all. No. On the fast moving stocks, because I have a diversified portfolio. I have biotechs that I intend to hold for 3 months. I'm talking the fast moving type of stocks, like Netflix, like Apple,
Okay.
like those type of stocks, like what we call high beta, the ones
Okay.
which gap open a lot. Okay.
Okay.
Look, the biotechs, even if the market opens down, some of these biotechs, which tend to work out very well, don't open up like $10. You know what I'm saying?
Yeah.
It's the
Yeah.
Teslas of the world, the Netflixes of the world, what we call the high beta momentum
Yeah.
stocks. Okay?
Yeah. I
The
got those.
day trading type of stocks. Those are
Yeah.
the ones that can sell full. Or
Okay.
depending on what you have, so one determinant of, so this is like giving you an example, the markets open up 40 points. That means the Dow Jones is opening up 320 points, right? So I look at the chart, but generally speaking, that's a pretty big open. So full is suggested. It's up to you. Now, the other thing that I do is I look to see what the VIX is doing. And if the VIX has bottomed, this is not the VIX, this is S&P 500. This is the last thing I'm going to show you before we sign out today. Is if this thing, for example, opens up all the way up here, the S&P 500, that means it's overbought in one full shot, right? So in that particular case, there's two possibilities. One, it's going to move sideways like it did this week when the markets opened up 1,000 points and then went up 2,000 points throughout the day, or it'll do this. So my point is that depending on how much money I am up on those particular fast-moving stocks, I will sell a full position, or let's say if I have 5 contracts or 10 contracts, I will sell partial. Would be 7 of them or 8 of them, leave 2 of them in there. If it goes, it goes. But I don't want to give up a lottery ticket just because the market's opened up big time. So
Okay.
so that's my theory. Yeah.
How much is the time frame? You know, the longer ones till 17th of April. Is it rather also
My longest time frame right now is April 17th.
Yes, but it's rather hold those on the longer time frame. Is the time frame also a kind of?
Yeah, the time frame certainly plays a part. Time frame certainly plays a part, but the money, to me, the profit plays a bigger part.
Okay, great. And last
Exactly.
question, it would be also a good moment to sell the losers. You know, the 20% something.
Well, the thing is that you have to consult the charts on that. Because if the losers can turn into winners in this type of market rather quickly, so so that that is something that it's on a case by case basis.
Okay, good. Thank you very much, Frank. I wish you.
The last thing that I want to show you very quickly, it's my pleasure, sir, is when you look at this chart. This is the S&P 500 depicted on the quad algo, the algo HFT platform. If you look at it, look how good it looks. Even this little puny sell-off did not even make any material dent. All it did was it's resetting the stochastics down to the oversold levels, which are indefinite, almost 80 to 90% of the time, huge buying opportunities every single time, even when the markets were going down. Look. And I showed this very clearly on the VIX video, which you should look at as quickly as possible. So here, we are still not fully oversold. I believe we get there either by overnight session on Sunday or maybe by Monday morning. And once it gets oversold and retests these levels, and that I drew out, I believe this gap has a high probability of getting filled, not necessarily on the upper end, which is almost 600 points higher or more. I'd say I'll take the lower end of the gap, but gaps do get tested. Look how it tested and then fell. See that? And then did this. So it was going towards the gap till 3 p.m. and then it dropped. But I do believe that that even if it pulls back to this level that I showed on my other charts too, which is 200 or 300 points lower, it still is a bull flag. So these are the things that allow me and my emotions to stay calm, because I'm using these mechanical structured charts that I create to say, you know what, relax. I know it looks bad in the morning. This is how I tell myself in the head. Looks bad in the morning, but should I sell, take the hit, or do I hold? And these are the only things that keep me in the game and give me serious profits, as you know.
Okay. Appreciate it very much. I wish you a good day and all the best for you and your loved ones.
Thank you, Patrick. All the best to your mother, and of course DM me with any questions, and we will continue with our program. Thank you for signing up. Thank you.
Please send me the link to that session. I'm gonna watch it over and over again. Okay.
Oh, that link to the to which session? Oh yeah, I sent that to you. You have it, right? Oh, the VIX session is on the Twitter feed.
No, the one we were just having together.
This one. Oh, this one you'll be sent. Yeah, when it downloads, I'll send it to you like last time.
I'm gonna watch it over and over again. Huh?
No problem.
Thank you very much.
And also, thank you for the testimonial. If you write another one, feel free to do so. I'll make sure it's posted. Thank you very much.
Thank you. Bye.
You too.